morning, everyone. Good morning, good morning. Took me a second to get going, but we are here and we are rocking and rolling. My name is Tyler. If you're here for the first time, I'm going to be helping navigate you through the wild world of day trading futures. And it's going to be a good day. We see the volatility actually reasonable right now. We see 25 handle candles instead of 100-point candles. So I think we might have a good day today. We're going to take a look at the news. If you're here for the first time, glad that you decided to join us. If you're watching after the stream, you can jump to the key moments using the chapter markers below. And lastly, if you are looking to take your trading to the next level, you can use the code DTJ, and DTJ, that code will give you the most updated discount on Apex currently. And with that, turning on my mood setting lights, let's go ahead and pray and let's rock and roll. So, Father, I just thank you for today. Thank you for the opportunity we have to build wealth as believers. And Lord, I thank you that you are faithful. And Lord, your word says in 2 Corinthians that in all things, at all times, that we would have all that we need, that we would abound in every good work. Father, this is what we believe is our good work. And Father, we want to make an impact on the world around us through what you are able to do in us through this and how you mature us into your image through trading. Father, we thank you and we look forward to the opportunity to bless others. In Jesus' name, amen. Okay, folks, good morning. How is everybody doing this morning? How are your day going? Tony, good morning. Glad to have you. Good to see you this morning. Let's go ahead and let's jump up to the daily time frame and let's just take a gander at what we got going on here. We got 8 minutes till the market opens. So yesterday we ran this big low, right? We ran that weekly low. And then we closed green. So we closed inside the range. We had that happen up here, and we had a couple green days as a result of it. So I'm going to say lightly, I'm bullish. I'm not looking for a lower low set today. We're going to drag our previous day high. We're going to drag our previous day high and our previous day low to our next candle. We're going to get that set. And then we have our new day opening gap, but I don't care about that midpoint anymore, so we're going to move that. And we have these major levels that I marked over here. We're going to get rid of those. We're going to look, we care more about the price action that's happening here instead of what happened back in April and August. So we're going to take a look at that. Patrick, you're right. I do normally do Tuesdays in the afternoon. That's kind of been my goal. So this would be early. I just didn't have my meeting that I normally have this morning, so I'm like, I'm gonna stream. Why not? I like being on stream. I like hanging out with everybody. So we had our drop yesterday. We retraced up aggressively to this high, and we've been consolidating over the London and Asia session. And this is kind of where we're sitting right now. Let's go ahead and mark our new day opening gap, which is right here. This is our new day opening gap for today. And then we're going to mark our midnight open. That is our midnight open. We're going to get rid of this other midnight open. We don't need that. And then we're going to mark our we ran London lows. London lows were ran already. As you can see, we have a London low sitting right there. That was ran. So since it was already ran, and the London high was already ran, we got to find what our next target is going to be. Let's see, London high. And then we have our opening range gap. That's going to be a discount opening range gap here this morning. And we just hit 930 from yesterday's price action, from Friday's price action. And if we reject from here, I don't mind looking for the 930 model to the downside. I think that might be decent, to be honest. So we're gonna shrink that size here a little bit. Outside of that, we do have an Asia low here, which we'll go ahead and mark. That's an Asia low, which is in line with the new day opening gap. And we have a lot of this lowers. We got all these swing lows with just sitting here. It's kind of interesting. Let's jump to the 15 minutes so I can get a clearer view. All right, so from the 15-minute perspective, we're still inside this range, which is not the best thing that we can have. When we're inside this range here, we can get all kinds of different price action. It looks like we're running up, but if I was to look at where price could go to, if we are going to see somewhat of a rejection here, which is also the midpoint of this wick on the 15-minute, I would like to see us come back down into this 15-minute fair value gap right here. We have not tagged that 15-minute fair value gap yet. All right, so there's that, and let's look at the 4-hour. Yeah, we would have a reversal right here. So this would be a 4-hour reversal, 6 to 10. So we would look for on the next candle for the price to come back down into a 15-minute fair value gap. Now that could be this fair value gap here. It could be this fair value gap right here. But that is in line of a potential bullish move. Now, this is short-term bullish. I'm not bullish in the long term right now. We still potentially could see lower prices, but I think we're going to have somewhat of a breather on what price is going to do here this morning. If we look higher as far as potential areas of target, we have this new day opening gap sitting right here from Thursday, April 3rd, that hasn't been tagged yet after the opening price happened. So we have higher targets, and then we also have here's 930. We also have this new day opening gap right here. This new day opening gap hasn't been filled either. So there's multiple areas of interest to the upside that we could absolutely run to. What we're going to do is look for our entry. We have a primary goal this week of not taking any impulsive trades, but looking for our entry and only taking that. With that, we got about 1 minute left before the market opens. Let's see if we can get situated here. Nope. So the 930 model didn't play out this morning. You guys got to see that on the screen. Now we sit and wait. Make sure that this other screen is working here. Let me see if I can get this working here. As far as a target to the upside, 930 is probably not the biggest key level in my mind, but we can work with it. We have a previous day high sitting right here. So I would like to see if we want to reach up for the previous day high before we get any type of retracement. Because we basically haven't had a significant retracement since at all. We've just been kind of moving higher. MR, good morning. Glad to have you here this morning. Nick, good morning. I'm waiting to see if we get any type of displacement. We have a nice reach higher. I want to see displacement from 930. That means we need to see a market, a change in state of delivery right here. On the 5-minute, this is the candle that reached into 930. So that's kind of what I'm looking for to see if we want to reach below that. If we do reach below that, it also sets up for a breaker right here. That's what I'd like to see. Just hit Friday's first fair value gap. We have an internal swing high that's already been ran. We're just going to sit and be patient here. feeling like some tunes today. I want some tunes. Also, we're waiting for that first fair value gap to kind of give us a cue that we could see some displacement. We still got 2 minutes and 40 seconds left on this candle. Let's see if this turns into our first fair value gap here. Candle size currently is about 45 handles, 20 to 40 handles. 50 handles, 70 handles. So we got some size on these. We just reached down into a 15-minute fair value gap right now. I think we could probably reach a little bit deeper if we want to run higher. My only concern right now before taking a short is looking at this previous day high as a target and not sure if I want to put my weight and confidence in yesterday's 930 opening price. We do have reason to reach lower. We got to fill the opening range gap. We got a 15-minute fair value gap down here. There's some liquidity. I want to see how this candle closes. This candle right here is the 5-minute candle. I want to see if we get a change in state of delivery on the 5 minutes. So this is what we're looking for. This candle right here. Do we close below these two up close candles? That's really what we're looking for. We want it to close below that line. Okay, so it did close below. I'm going to go ahead and take a short based on that. Put it right there. Let's see, 87.33. All right. Let's see if that will hold. I have my breaker here. We have a 5-minute change in state of delivery. I'm gonna run for this low down here. I'm on stream. Sure. All right, well, it reached up and tapped us out. Our stop loss was hit. Let's see if it was just volatility or if it ran or if it saved us. My gut is telling me it just reached up, tagged us, and it's going to run lower. But I'm not going to jump back in. I'm going to sit and wait. All right, so it did violate the first fair value gap here, but it still reached and tagged our stop. Let's see if it runs back lower. Morning, Stan. How you doing? Outside of that first fair value gap, we haven't had another fair value gap formed except for just a second ago. Right here to the upside. I would say technically the breaker is violated. The breaker block is sitting right here. This would be the whole breaker block. And we've closed up above it. So I would say, based on my rules, the breaker would be violated. And I wouldn't want to be in this breaker any longer because we've closed above that breaker block. So now I'm not looking for a short. If that's going to be violated, I'm looking and not going to do anything until we hit a higher time frame key level. So for me, that's going to be the previous day high. I don't think we have anything else until that. Yeah. So nothing's going to happen. I'm not taking anything short. My only chance was seeing how we ran into 930 from yesterday, and we were consolidating, that I wanted to use that as my reason to potentially get a little bit of a move towards the midpoint of the opening range gap. That idea didn't play out, so we got stopped out. Now we sit and we wait. We wait for a higher time frame key level to take place and to be swept, and that's going to be there's nothing else other than the previous day high. So we can play the draw to that potentially, or we can just wait and see if we can get some type of reversal from that. We do have a breaker at our 930 price. What's the reason you do your execution on Trade of 8? I've just gotten used to it. That's on the honest truth. Just gotten used to it. We want to see if 930 finds support here. And price pushes higher here. We did just dip into this fair value gap right there. But now it's is this first fair value gap going to hold? That's the next question. No, it doesn't look like it. All right, so we swept these highs. We came back, violated the first fair value gap. We're going to see if we violate this last down close candle right here, this last fair value gap, because technically we should be running this low. And if we're not going to do that, we are just going like this. And this means even if something looks good, I'm going to elect not to take it, because look at this back and forth. We don't want to mess around with that. I'm not going to mess around with that. So we're going to sit here and wait a little bit. No, Byron, it's simply because I've just gotten used to it. Also, when we have some glitches on Tradevate or on TradingView, I'll execute on I'll execute on Tradevate, and that solves the problem. So it just reduces any potential mess ups for the most part. Good morning, Jay-Hog. Morehead Saint University basketball arena. That's cool. Yeah, we have a big Easter weekend coming up too at our church. All right, so yeah, we do have a nice fair value gap here and a potential fair value gap here. It looks like it wants to move higher, but I just got disrespected to the downside. It looks price swept the high, reversed. So we're seeing price action that's supporting price moving higher, but this fair value gap was violated. This breaker was violated. This order block was violated. This first fair value gap was violated as support to the upside. So it's like, do you want to take that risk that we are in fact moving higher? For me, the answer is no. I'm going to let it play out, let it run. If it's going to run, it's going to run. If it's not going to run, then guess what? It works out for me. I'm not going to be in this trade. We already took one valid setup that just didn't play out. So now we need to wait for something cleaner, because we're obviously seeing something in price action that is not having much correlation and not really respecting PD raise, premium PD raise, and discount PD raise. So if it's not respecting premium PD raise, that means we're not seeing price move lower. And if we're not respecting discount PD raise, that means we're not seeing clean movement to go higher. So that means just sit out. So that's what we're going to do right now, is sit. DMLK, good morning. Welcome. Question for you. Do you use the monthly premium package with TradingView? Yes, I do. Now, I'll need to review what I'm paying for, because I used to use the 30-second and 15-second, and I don't hardly at all. Now, yesterday, I'll admit, for those on the stream, who was on here yesterday and we watched that giant move higher? I'm not going to take this, okay? There's nothing here for me to take, so I want to show you guys something. This is the only reason why I consider not taking off the 30-second, okay? Look at this. I was sitting here and I told you we had no opportunities for taking this trade, right? I had a breaker here, we didn't hit it. We had a breaker here, we never hit it. We never came back down into it, right? We had a breaker here, we never came back down into it. We had a breaker here, we paused at it, but we never came back down into it after we left it, okay? Now, if I drop down to, let's say, the 30-second, I'm going to show you guys this, okay? Pay attention. Is this morning? Yeah. Oh, I'm on the 30-minute. I want the 30-second. That's why I was confused there for a second. Like, that's confusing. All right, so now we're looking at the 30-second, okay? Look at this. This breaker did not hit. This breaker came down into the fair value gap. That's a valid entry. This breaker came down almost to it. Okay? This breaker right here was not. So we had one entry right here if we went to the 30-second. If we drop down to the 15-second, price action was really nice. Okay, so we have an entry here. 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 I mean, we even have an entry up here. Opportunities for us to go long. So when we see, and this is an area that I'm not the best at this. This is what I'm sharing with you is based out of missed opportunities. When we see price action being really aggressive and running one specific direction without retracements, you can go down to a lower time frame to find a breaker or to find an entry that you can get in and then take the long and participate in that move. I didn't do that yesterday. I didn't do that. Do I regret it? That's a tough question. Because it literally moved like 600-700 points. That would have been really nice to be a part of. The downside to using the 15 and 30-second is if we are not clearly in a buy model, which here we were, it just, not all the time are we able to recognize that right away. We were in a buy model. I mean, look at the 1 minute. There's almost no retracements. When you start seeing this signature and price where you get very minimal retracements, I was waiting for the retracement the entire time. I was waiting for it to do this, and it never did it. This is where you need to be able to recognize when it's time to go to a lower time frame because price is fractal, and then you look for that entry at the obvious breaker on the 1 minute, and it will give it to you, and you can participate in the move. That is what would be my thoughts on that. And as of right now, we are still moving towards this level here. But how we get there is not very clear, right? We thought it could have been here, it retraced. Could it be here, or is it going to retrace back down to 930? So we're going to sit on our hands and we're going to wait. Jaeyong, present. You were, yeah. It was, that was tough. That was tough. What is a breaker, Byron? Breaker. Breaker is a signature in price. Tony's telling you right there, but it is a signature in price where you see price moving higher, and then it moves higher, and then it moves higher, and then at some point, price will run one of the lows that was created. And then it will come back up to that low and then sell off. And that is the breaker right there. That's a breaker. Your entry would be there. Stop loss would be at the high of the breaker bar, which is this down closed candle, and then you would target somewhere down here, and that is what a breaker is. So we saw that here. We saw that here. We saw a high, low, higher high, and then it broke lower, and we had a 5-minute change in state of delivery, which you may or may not know. And we were looking for it to come back up into this level. I took a short right here, and it didn't play out. I wanted to run lower. It didn't. It decided to go higher. I said that there was a risk that it may go higher. Why? Because we have this level right there, a higher time frame PD rate. So do I regret taking that trade? I would say no. I followed my rules. There was reason for it to go lower. We had a relatively key level, and we had a 5-minute change in state of delivery. To me, that's just a loss. That happens. It's one of those trades that is going to happen as you take trades. You're going to have losers, and that would have been a loser. Now, the question is, do I take, is the trades that follow that loss, are those going to be A+ setups or not? Or am I going to just recklessly try to take trades to earn back what I lost? Jay Hong, yeah, I did not get into that, and honestly, I really don't like the price action yesterday. Yeah. I told you guys that if you were to go on Twitter, you're going to see people that are going to be posting crazy things. It's just what happens. And that is where you got to guard your heart and your eyes to not let greed or envy grip your heart. I even saw some stuff, and I'm just like, I got to turn that off. I can't entertain that. Oh, I'm sure that helps. Yeah. I mean, of course that helps. All right, so while we're sitting here waiting for this previous day high to hit, I'm going to jump up to the 15-minute and see, or even the 30-minute, and see what we have here. If there's anything that we might be missing. So we got the 30-minute. Let's check out the hourly. All right, so we got an hourly fair value gap here. No, Ted, not yet. We took a breaker to the downside based on us hitting 930, and it ended up being a loss for me. So because of that, I have identified that we need to wait, or at least I'm going to wait till we hit the previous day high for a potential trade. Now, if it gives me a nice retracement, leaves a fair value gap here, and we break through it, I will take that towards this high. Thank you, Jaeyoung. That's that would be correct. I followed my rules. Everything played out as far as my entry model, but the trade just went against me. So we followed the rules, took a loss on the chin, and we wait. That's a good way to look at it. So I had a what would we call that? A loss? A loss that was still a win? A win? Took a winner, had a negative winner? Is that what we're going to call it? Just had a negative winner, meaning I followed my rules, didn't let emotion get the best of me, and took a loss. A negative winner? I don't know. Maybe, maybe not. All right, these down close candles right here, we're watching them to see if they want to hold price right here and if price wants to continue higher. We're already in 10 a.m. We're at 10 a.m. right now, so a negative win. We can call it a negative win. A loss is when you take an impulsive trade, not in your plan, and you lose. And then you could call, if you take an impulsive trade, you had a loser win. We had a loser trade turn into a winner. I was paper trading on my phone, took a loss, one that I thought was a breaker to the downside. Yeah, that's the one I took. I didn't take the inversion. If you're talking about this inversion right here at 952, the only reason is we really didn't have a significant drop of sweep of liquidity. And so I didn't want to take this to the upside. Like here's an example that there's probably a fair value gap on the 30-second chart. So like here's an example of a 30-second entry right there. It swept the high before, so that was an invalid trade, but that's what the value of having the 30-second time frame is. You can drop down to it, see potential trades that you could get into that otherwise you wouldn't see. But nothing there. All right, so 5 minute has not a single fair value gap in here. Okay, so to me, this is a setup for a big low resistance liquidity run once we hit a key level. So that's kind of what I'm looking at. I would like to see one fair value gap here, at least on the lower time frame. What does the 15-minute look like? Got a fair value gap there. Yeah, this is not the honestly, yesterday's price action looks better than this. Yesterday was insane, but yesterday's price action looked better than this. Do the wicks have to meet for it to be a good breaker? Let me think if I'm understanding. We're sitting here. I'm going to show you a great breaker. Okay, so it was yesterday's move higher. Okay, on the 30-second, and it doesn't matter what time frame we look at. It's just it'll be a good reference for you. All right, so we run lower. Our breaker is right here. My ideal entry is when we hit the high of the up close candle. So it's the candle in the direction we want to go. That's what we want. Now we never hit that breaker there, but we come into the fair value gap that overlaps with that breaker. So this is a valid entry. If we hit the breaker, wicks, I want the wick or any part of this candle moving down to touch this up close candle preferably. Whether it's the high or the body, I don't care. But when it hits something like this, this is your entry. That's what you're looking for. Now, more importantly, Byron, pay attention. More importantly than a breaker, you have to make sure that this price action here hits a key level. What was our key level that we hit? Well, we swept these lows right here, and that was our key level. We had a sweep of liquidity. When you have a sweep of liquidity, we are looking for price to, and then the second thing is we want displacement, big candles moving in this direction. So we got that here, and this would have been beautiful. I just wasn't looking at the 30-minute or 30-second time frame. You don't know anything about ICT. Thank you for sharing that, man. I'm thinking about jumping on board and intertwining this with my style. Yeah, check it out, man. I will tell you that once I started learning ICT, actually I started committing myself to those concepts 2 years ago in 1 week. 2 years ago, April 15th, 2023, I came across my first ICT video, and I remember saying to myself, this is insane. And that was the beginning of my journey with ICT. And to this day, haven't changed any. I haven't gone any other direction. There's no need to. What the battle is now, and most traders will tell you, is your psychology, how you manage yourself while trading. Yeah, ICT has a lot of videos. Yeah, so you can learn. So Byron, feel free. If you don't want to pay anything, you don't need, or if you see all these ICT content creators out there, you don't need to create anything. You can find everything on YouTube. You'll spend hours more doing it because there's just so much out there, and if you really want to learn his concepts, you need to learn from him. But he really likes to talk about stuff that isn't related. So he'll have a 2-hour video, and the stuff you really need to learn is somewhere in there, and it's only 15 minutes of that 2 hours. It's really frustrating. But if you want to save time, I did, like you've seen in the chat, I do have a course you can find in the description where it's all his concepts and with no chit-chatting. It's just all focused on the content and helping you understand the concepts. There's about 50 videos total that I have in there. If you're interested, you can find that below. I will be doing a sale, a promotion for Easter Sunday. So beginning next week, most likely we will be doing Easter Sunday. Is that this weekend? When's Easter Sunday? Yeah, it's April 20th. So next week I will be doing a sale for the course, a discount for the course if you're interested. I've been wanting to do one. I haven't done one since Valentine's Day, maybe. I think it was Valentine's Day. Yeah. Jay Hong, 80% talk, 20% content. Now, I will tell you that some of the talk is very good for psychology. He hits on a lot of those points. Yeah, so this week, Chase, I will, or thanks for letting me know. I'm probably next week on Monday, I'll be doing a promotion for the Purpose Driven Trader Academy. The Venom model, I haven't even looked to see what his Venom model is. I haven't even watched that. I mean, it's so easy to come up with new content and new models. I mean, guy, I could make up a model I could make up a model right now. I could make up a model and I could share it with you guys and I could name it and call it anything. I do believe there's a degree of that in ICT's concepts. No doubt in my mind. Why not drop something that's spicy? I guarantee you he didn't call it the Venom model. He came up with that. I guarantee he came up with the Venom title this year. Guaranteed. No doubt in my mind. Because all he's doing is coming up with a sexy name and, throwing that on an idea that he had. I'd like keeping the names of my models simple. The 3 p.m. model, the 9:30 model, the hourly reversal model. Maybe I should come up with a fancy title and see if that actually grabs people's attention. Additional confluences to the 2022 model. That might be helpful to watch because honestly, the breaker is a version of the 2022 model as well. So all of those are collectively in the same type of trade setup that you're looking for. All right, we're waiting for this previous day high to be hit. And at that point, we're still going to sit. Here's why. It's 10:21 right now. what we are missing in all of this price action is displacement. We're not seeing aggressive displacement. What do I mean by that? Look how we got aggressive here. Do you see these two candles here? Right? We are consolidating. You see these three candles here, right? We're consolidating here. We thought we saw a breaker to the downside. We got aggressive candles, but as soon as we run this low, we start chopping back and forth. We make our way higher. We aggressively move lower. We aggressively move higher. And then after we run this high, we do this the entire way higher. This is price action I don't want to trade in. I want to trade in those clear, crisp moves. And so what is a signature for that? There's two things. Key levels, number one. I would say three things. But they're not always in this order, or they're not always only in these circumstances. So I'm looking for key level. I'm looking for time. Is it around the top of the hour, or is it in a macro? And then I'm looking for displacement. I'm looking for big candles to displace in the opposite direction. Those three things gives us the overlapping confidence that price is going to do something. Once it does that, or those things, now I'm saying to myself, okay, do I see my model? Do I see my inversion model? Do I see my breaker model anywhere that I can participate in this? And that's specifically for our reversal trading strategies. That's really what we're looking for. For our reversal strategies, we can use the breaker and we can use the inversion model specifically. For continuation models, meaning let's say we missed the big move here. The continuation model can be an inversion to the downside. It could be a breaker to the downside after the big move from the key level. And lastly, we can also use the 30-minute and hourly continuation models that we've talked about before, which those are a higher time frame continuation model of price action moving in a specific direction. So here, I have already looked. We have a 30-minute continuation model right here. We don't get an entry though. So we have a sweep of liquidity right there. So we have candle 1, we have the low. Candle 2 is the sweep. Candle 3 is the expansion. It's during this candle right here between 9 and 9:30 that we're looking for a 3-minute entry. So between 9 and 9:30, that is from right here to right here. We do not get a 3-minute entry. So there was no model for this continuation. It just didn't give us a 3-minute fair value gap for an entry in any of this price action. So we weren't able to participate in that. That was one of the first things I looked for to see if I could find that. That was based on the 30-minute. We could jump to the hourly. The hourly has a sweep of liquidity down here. I wasn't on the charts at this point, but we have it right here. So we have the London low sweep, and price closes back into the range. So this candle right here, we're looking for a 5-minute entry to the upside, a 5-minute fair value gap to go long in. So between 7 and 8 a.m., let's see if we can find a 5-minute entry. Between 7 and 8 a.m. 7 a.m. is right here to 8 a.m., which is right here. Do we have a 5-minute fair value gap where that price drops into? We do. This candle right here. Price drops into this 5-minute fair value gap right here at 7:15. This would have been our hourly entry, or our 5-minute entry based on the hourly reversal and continuation model for a move higher. So we weren't on the charts at this point, but there's our model. We just weren't able to capitalize on that. Following the white rabbit into the wonderland of ICT. But I mean, yesterday, why do we? There's nothing that. Let's just say we get a displacement candle right here. I'm not going to take it because we didn't hit this level here. If we jump up to the 15-minute, look at what we're dealing with here. I'm going to get rid of this. I don't think we need that anymore. Look what we're dealing with. Yesterday's price action right here gave us this giant range. And we're inside that range. So if we want clean and good price action, we have to wait for it to get outside of this range to create a new range. So as soon as we hit this high, we now can look at this range as a potential market maker sell model, or we can see it as something to find support here to move higher. There's multiple options, but we can't look at this price leg. Let's just say this price leg is inferior to this price leg over here. Sorry, it's off screen. This price leg is superior to this price leg right here until we actually eclipse this by sweeping that high. Now, I thought maybe 930 might be a key level where we could get a retracement, and I was wrong. I had a negative win there. I could see so many people come to my stream and hear me say negative win, and they're like, what the heck is a negative win? Isn't that low you swept a breaker since it ran the previous high? Yes, but that's only on a lower time frame there, Byron. So breakers will show up on every time frame. But we want higher time frame key levels are always superior to lower time frame patterns. Okay? We're going to call the breaker a pattern. But that pattern has to fit inside a bigger box called narrative. How is price actually moving? And price moves in correlation to liquidity and inefficiencies. So price is going to run to sweep these highs and then run to fill imbalances. And imbalances is a fancy term for fair value gaps. The spaces between candles and their wicks. Oh, let's check out ES here real quick. ES has already ran its high. No, it hasn't. Wait, that's not even ES. What am I looking at? ES already ran its high. So that's a good sign. Now we're just waiting for NQ to do the same. And then we can see if it wants to give us an SMT. Yeah, look at that. This looks beautiful. A low here. Sorry, I don't know if you can see that. We got these relatively equal lows here, followed by this nice push higher. That's what I'm looking for. I want to play this. I don't need the whole thing. I could just run to there too. That's 300 points, 350 points. Do you want to take that before you hit the previous day high there, Tony? SMT stands for smart money, smart money time, smart money trade. There's no real letter for it. ICT's talked about that multiple times. But in other words, we are looking for correlation between NQ, which is here, and ES, which is here. This is ES. And so if ES makes a higher high, but NQ does not make a higher high, it makes a lower high, but they've hit a key level, we can call that an SMT. Smart money, yeah, smart trading technique, he's called it that. And then we look to see if price wants to start moving in that other direction based on seeing that SMT. So remember how Tony said 1024 was a breaker? This is not a breaker because we made a lower high right here. But on NQ, the 1022 and the 1028 candle made a higher high. So that would be considered an SMT. Now, I don't like using every SMT you see because it can be very distracting. Right now, we want to it is more important for me to see NQ hit this high. So there's the 1022 candle and then the 1028 candle, and see how NQ made it higher. Right here, higher. ES was lower. So we see an SMT, but we're missing this level here. I really want that. Technically, let me rephrase that. It doesn't have to do this, and it can not hit this level and still drop. I've seen it. We've seen that multiple times. I've called that out. But there's a 77% chance we hit this high. Because when you look at historically, how often does price run the high or the low from the previous day? 77% of the time, price action will run either the high or the low of the previous day's candle. Well, when we're this close, would it not make sense to wait for those odds to play out? So for me, I'm saying, even though we may get a breaker here, maybe we have an SMT, even though we have displacement, I really want to wait for this level to hit. Has that screen ever started working? There it goes. How nice would this be for this candle, 30-minute candle, to sweep this high and then close inside this range? That would be the beginning of a potential 30-minute reversal trade where price could run this direction. So that's kind of what we're watching for, is that sweep and then it not to push higher, but it to stay low or close back inside this range for the 10 a.m. 30-minute candle. Also, look at the hourly. Look at where the body of those candles are resting. Look at all the bodies staying beneath the consequent encroachment of that hourly SIBI. Just noting that. Messy session after yesterday. Tyler, how you got on today? All right, folks, everybody else in the stream, we're going to use it right here. Let's see if it confuses Adzi here. Ready? We had a negative win. Tell me if you think you understand what that means, Adzi. We had a negative win today. It's something we were talking about earlier today. I don't think you were on. I'm assuming you took an imaginary TP. Oh, no. I'm assuming you took a sell instead of a buy and hit the imaginary TP. Yeah, no, we took a loss. We took a sell. Took a loss, but we followed our rules. So we've decided A loss by following our rules and following our entry model is called a negative win. So we had a negative win. I don't want to keep calling it a loss. I think we need to change our thought process on taking losing trades, because the losing trades are inevitable. They're going to happen. But how we handle ourselves by following our rules, our plan, is a win. So, hence, negative win. Brian, for sure. Huge difference. What metrics could we use to indicate the likelihood of a greater follow-through in price moves? You look at previous price action. Number one, meaning we look at this. Is it clean? Is it clear? No. So is follow-through have a high probability? No. We also look at key levels. Have we hit key levels for a big move lower? No. So lower probability that we actually see a big move lower. Could it still happen? Yes. But that's why it's one of our entry models or entry criteria, is we want to see it to hit key levels because the probability increases that. And number two would be typically the days following big moves. Or number three, typically days following big expansion days tend to have fake breakout days. Or high resistance liquidity. Meaning we don't go up or lower by any huge degree, but we go like this. Running liquidity back and forth. All right, so ES is displacing lower. It's moving lower. NQ has not ran its high or the previous day high. So am I interested in this? Not really. It is in the macro time. It's 10:45 right now. That, I mean, you see all these down close candles in a row. That's pretty nice. We have a fair value gap right here. And we just, did we close below it? We barely closed below it and ran that low. I would like to see this run that high and then run lower and give us an entry here. That's what I would like to see. ES has a breaker that it's running into, a bearish breaker right now. But I don't want to trade something when I know this is here. Maybe 3 or 4 weeks ago, I took a trade like this, and I'm like, this looks great, and it ran against me aggressively. And why did it happen? It happened because the previous day high was sitting right there. Yeah, I mean, honestly, this would not be a bad trade to go higher. Because sorry. We swept these lows here, and now we could potentially see a push higher. What does the 2 minute look like? No. 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 The only potential entry we have that we could see that I like would be that small fair value gap, and I don't really like that either. Do you see how nice aggressive price action, but that as soon as we ran these lows, we just chop back and forth? That's exactly what we saw over here. Now I don't know which direction it's going to go. I want it to go back here, but it may not. Do we have a 15-minute fair value gap there? So we did hit that 15-minute BISI. Now, because we still have this level, this previous day high, I do like the idea of that being a bullish breaker. We have a breaker now. Low, high, lower, low. Inside this 15-minute fair value gap. If we get aggressive displacement, we can use that as a potential target. For those of you thinking, well, if you think that's going to happen, Tyler, why don't you get in now? Because it could go either way right now. Us moving above this breaker is what's called a market structure shift. It's ran through a premium PD array that we want to see it run through. We want to see premium PD arrays be disrespected. And when we start seeing that, it gives us more confidence that we are, in fact, potentially moving in that direction. But I don't want to catch a falling knife. If this wants to drop, I don't want to prematurely take an entry here thinking that we should run and hit this previous day high. I don't want to be so committed that I'm catching a falling knife. That's what I'm trying to say. Ted, that's right. Got to wait for the tip of the hat. But even still, we're slowly grinding lower, doing this little grind. Do you see all the overlapping candles? There's one fair value gap, and that's right here. A lot of overlapping. I don't like that. Some days are great, Adzi. Some days are harder than others. That's just the honest truth. But it's something that I have to keep in the forefront of my mind. For example, this week, Adzi, my primary goal is to not take any impulsive trades. So, impulsive trades are usually what caused the revenge trading. Impulsive trades are usually a result of over trading. But if I'm taking a good loss, if I'm taking a negative win, those are easier to digest. Easier to say, you know what, I'm going to follow and continue to follow my rules. Because a negative win is the result of you following your rules and it just not playing out in your favor, right? So, been easy for me since I couldn't get on my computer the past 2 days. You know how the Bible says to run from the adulterous woman? Okay? We're going Bible talk right now for a quick second. The Bible says to run from the adulterous woman. It doesn't say reject her and tell her no and walk away. It tells you to run. Sometimes I think of revenge trading and over trading in that perspective. It's so enticing to take another trade. It's so emotionally gratifying that it's almost easier to run from your charts than it is to continue to sit in front of them and tell yourself no. You know what I mean? I really want to take a long right here. Look at the bodies respecting the midpoint. We are at a breaker as well. Let's see how this candle closes. If this comes back up and we respect this again, I'm going to take an entry. Long. If we close below this, then it's irrelevant. But I'm seeing 1, 2, 3, 4 candles in a row respecting that. I'll entertain it if it wants to come back up there. And the answer is no. So if all of this fails, folks, and we decide to continue to run lower, we do have an inversion right here that we could take to the downside. If we close below this fair value gap, we could run it to this low over in these lows over here. There's just not a very clean and obvious level here, folks. See you, my friend. So if this hourly candle closes bearish, we can use a 5-minute fair value gap to go lower. That's an option, but we never ran that high. That's the thing I don't like. It's not impossible. But do we have a 5-minute fair value gap? We may here in 4 minutes. That may be interesting. All right, at 11 o'clock, what I'm looking for at 11 o'clock is this. I'm looking for 11 o'clock to come up into this potential 5-minute fair value gap. If we can get that and I can see displacement, I'm going to look for a trade to the downside here. So this 5-minute fair value gap isn't valid yet. We still have 3 minutes. But what I would be looking for is price to come up into this 5-minute fair value gap here. So something like this, and you could take the trade here on this expansion low. You could potentially try to take it off of there if you think that we're not going to run back for the previous day high. We've obviously run far enough away from it to where if we get a setup to the downside, we can potentially take it. It just may not be you know, a huge, gigantic trade. I'm not going to take this first inversion to the downside. NQ or ES hasn't ran its low though. Wow. Down there, it ran that one. All right, got 2 minutes. I'll be right back. I have to use the restroom here real quick, folks. That's still 34 points, so it's still a legitimate setup. All right, there's technically an entry. I said I wanted to wait for the 5 minute to be tagged, and I'll be looking to take a short here. ES did run its low, NQ did not. If we don't reach this level, but we close below this green closed candle, I will take a trade to this low. I'm going to take that entry there. It hit that swing low. I'm going to reduce my risk because I want it to come up a little bit higher. So I went down to one contract, and I'm going to see if I can get a deeper entry into this 5 minute. Because we still haven't gotten technically that entry yet. I entered a little early. So I'm going to I took a contract off, and then once we reach up into here, I'll add a second contract. If it wants to run without me, at least I'll be in the trade with one contract, but I think it's wise to reduce some of my risk there. $17,900, and I might run all the way down. See if I can run all the way down there, because it's only a micro. I want to see if I can get a big trade out of this, if it's gonna go. Chase, I did take a short. That's one micro, yes. Yes, you can, Chase. You can make as much as you can. For an eval, your goal is $3,000. So if you can make that, that's your goal. All right, so initial target is this low. Obviously, I only have one contract, so I'm going to hold it. I'm going to see if we can get a bigger move. I'm seeing a market maker sell model, so I want to see if I can get it all the way down. Honestly, down to these lows over here. ES has, if you take a look at ES right here, ES has these relatively equal lows. We'll just call it here. I want to be in the trade on NQ for ES to hit these levels. This is what I want to see ES do. And so I will ride the NQ trade until these levels are hit or I'm stopped out. That's the goal. If we come back up into that 5 minute, I may add a contract. And honestly, it would be this 15-minute fair value gap down here. That's kind of the target, 17,900. This could easily come back up still and tag this 5-minute fair value gap that we've been marking. We're just now running this low here. If you want to take profit, I would take profit right here. I would take profit right here because there's a good chance we can come all the way back up to this level and then see that. And I might actually take this. If we can, I'm waiting for ES to hit its low. And then I'm actually may take profit here with the expectation that we're going to come back up higher. And then re-enter based on that 5-minute. So either we expand here aggressively, or I'll take this as a win. This is a 100 points. What is this? 152. We're at 50. This is a 100-point trade right now. So either we expand lower aggressively here, or I'll probably take profit. I'm going to take that. We're going to close green here, and I think we might come back up. So took that trade. Nice win. 100 and some points, folks. Good job. That was worth it right there. I wish I had 2 contracts on that. So it didn't quite make me completely green here, but it definitely put a huge dent into that first loss, because we had a 50 handle loss with 2 contracts, and we had a 100-point win with 1 contract, so it basically makes it break even. The further we get away from this 5-minute, the less likely I see it actually reaching for it, which is disappointing. I mean, I can't complain on a 100-point trade here. I'm Tyler Chase. I did all mine in one day. I think Apex has different evals with different rules. Yeah, you don't. You can take all your. You can pass it in one day if you want. That right there, Jaeong, is a positive win. That's a winner, winner. Winner, winner. Followed the rules. I did get in a little early. What were we looking for? We were looking for price after 11 o'clock. Here's 11 o'clock right here. We were looking for it to reach up into this 5-minute. Boom. Now, why was I willing to chase it early? This is very important. We have to look left in a market maker sell model. We have the lowest point of a swing low right here. That was the low of that 5-minute fair value gap. But what's also right beneath that is a fair value gap. This fair value gap right here. So we have multiple things that are happening here. We have a down close candle, which is right here. right? That's technically our breaker. We have the 5-minute or the hourly reversal entry. We have a swing low, and we have an inversion fair value gap right here. Okay? If price is acting heavy and it's not willing to get back up, or if it's not reaching for it, the question is, do you wait for it to hit that spot, or do you take your entry and just reduce your risk? That is what I ended up doing, right? Because I didn't know if we were going to reach higher or not. I thought we were, and so I reduced my risk so I could have a larger stop loss. I took a larger stop loss, meaning if I want a larger stop loss, I have to take a smaller contract size. I wanted to do 2 contracts, but I didn't want to take another 50 handle loss on it. So reduce my size, keep that 50, even go a little bit higher for size for a lot to protect my position, or excuse me, so that I don't get stopped out, and be able to participate in the move if it's just too heavy and it doesn't get back up there. And that's exactly what happened. It just became too heavy. And we were able to capitalize that with smaller size, but still, I'm not complaining about that. There's always woulda, coulda, shouldas in every trade. Right? We took our trade based on it coming back up to this level here and this 5-minute fair value gap. Those were the 2 reasons why I decided to sell. Now, I would love to see this. If it wants to come back all the way up here right now, I'll use that as a potential entry. I wouldn't care at all. I'll use that as a potential entry if it wants to reach this 5-minute breaker or the 5-minute. There's still reasons for us to consider that. We want to be probably a little bit careful. I'm not going to prematurely take this. In fact, I'm going to let it hit it and see it reject before I participate in something like that. I don't want to take it on the first stab because why? Could we still be reaching for that previous day high? Potentially. I mean, look at these candles right here. Those are aggressive. Is this just a fake out to get people to think we're going higher so we can go lower? Or in fact, is this the move towards the previous day high? I don't know. Question about Apex. I had a loss today. Does that count against your drawdown? 25 on a PA account. Yes. Or is it the profit you don't take that counts towards it? Both. There's 2 types of drawdown. Your regular drawdown, which is what you realize, your realized drawdown. So when you exit the trade, how big of a negative number is that? If that negative number collectively over multiple losses adds up to what you've $2,500, you will lose your account. Now, there's also unrealized losses, meaning you were 1,000 points in the green, but you only closed it at $500. So you made $500, but you are now in drawdown by $500. Does that make sense? You actually could have sold it at that $1,000, and that's what they're looking for traders to sell at those high points and not just, let it do this and go back to break even. They want to see you be profitable. Well, you were $1,000 in the green. You should have took some profit, right? That's the idea. So even though you made $500, you're down $500 in drawdown because you let a trade go from $1,000 in profit to closing it at $500. Here's a mini bullish breaker. Do we take that? Nope. I'm not taking it, but I'm watching it. I want to see this do a fail. I want it to fail to the downside, and I want it to move higher. However, if it does close, that's not a bad entry either for a continuation move. The risk is probably a little high. It's not that bad. Now this is the big level here. If this candle, which is 1124, closes below these up close candles or closes below this blue box, that's a good sign for a continuation lower. So this would be not a bad entry. There's a little more risk, but you're only taking it if it closes below this blue box, but not below this low. So in this case, it ran the low before it closed. So that's a no trade. No opportunity there. Now if we close below these up close candles, that turns a 5-minute, that will make a 5-minute order block. So we got a 5-minute order block now, which promotes a continuation to the downside. But it's not necessarily one of my entries that I want to take. There's also a breaker right here. High, low, higher, high. I'm sorry, folks. Here's a continuation breaker we could see. We want to see it close below this and come back up to it. If it's not really going to expand any lower, what we're looking is a sweep of liquidity here. We want to see expansion this way. We have a fair value gap here, a breaker here that could reach up to this 5-minute fair value gap. But I really like the idea of running lower. I don't think I want to trade an upside move right now. To me, I'm seeing a market maker sell model. You see it right here. Boom, boom. I want to participate, if I can, in that price action. We got a huge 100-point move on that. But can we jump back in for a continuation? Ideally down to this level here. All right, there's our expansion. Can we come back up into this volume imbalance? That's really what I would be looking for. If we can get into this volume imbalance, that may be of interest right there. Jaeyoung, we'll see you, my friend. And I think I'm going to call it a day too, folks. It's been 2 hours. We're going to call it a day. We'll be back here tomorrow, New York Standard Time at 9:15. Going to be a good day. Stay safe. Good trading, folks. God bless. And we will see you all tomorrow. Take care.